Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about GBP USD because at the moment we do have quite interesting price action and structure. So as usual, first I will be covering the technical side, then we will move to see what we have from an order flow perspective, so the commitment of traders, which is the COT data, so what the biggest speculators in the market are doing, so hedge funds. Now, starting here on the monthly, what we can see is that we have a market which at the moment is testing a very strong area of previous monthly support, which is now turned resistance. Now, this is historical structure support. From here, all this move to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected. At the moment, we are once again testing this area as resistance. So there is definitely the possibility to see the market provide a potential rejection to the downside, at least in the short term. Now, we can also notice how we do have an impulse and correction. And in general, after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse. And what we can see is that we have a 0.786 Fibonacci retracement lining up exactly with this previous monthly support and resistance, creating confluence of resistance here that we do expect the market to reject lower. Going down on the weekly time frame, what do we see? Now here on the weekly, we can see how the market has just created this candle here. Now when you see a strong impulse and then the creation of a red candle, what you expect at that point is for the market to fill in that wick, essentially the wick of this red candle. This is a pattern that you will see the market create over and over again. So we have good probabilities from here to see a rejection lower. We can also notice how we're testing exactly the previous supply. In fact, this was the last strong correction before all this meltdown to the downside started, meaning that this is the resistance that we could expect this market to reject to the downside as we are currently facing it. Going down the daily time frame, what do we have? Now, here in the daily, I did speak about GBP/USD a few days ago. I spoke about it after this impulse. I made a full breakdown when the market was around this area, and I explained all the reasons for which we could expect first a correction and then the continuation higher, which is in fact exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, in a situation like this where we have a market which on the monthly and weekly seems like it has good probabilities of continuing lower, however, on the daily time frame still has bullish structure since it has been creating higher highs and higher lows without breaking structure, we have contradicting directions on the different time frames. Now, the higher probabilities in the market always come when all the directional time frames are showing the same direction. So with the monthly, weekly, and daily are all indicating for one specific direction. Now in this case, monthly, weekly are bearish, but the daily is still bullish, which means that until the market will remain above this previous low, this market will easily continue higher. However, if the market manages to break below this low, at that point, this previous support would become resistance here. And after the break of previous support and resistance on the retest, that is where we would have very good probabilities for a rejection lower, because at that point, monthly, weekly, and daily would all be indicating for a potential move to the downside. So that is where we would have the highest probabilities. Now, if we go and see what we have when it comes to the commitment of traders, so what the non-commercials and the biggest speculators in the market are doing, and we check the data for the pound, the first thing that we have to keep in mind is that if you're checking the data for the pound, you're actually checking GBP USD, because all currencies on the spot are traded against the USD. So if you're checking the data for GBP, you are already checking GBP USD. What we can see here is that with the last report, we went from minus 36K to minus 28K net positions, indicating an overall increase with the last report of the net positioning. In fact, we had 2.5K longs added from an institutional perspective and 5.8K shorts getting closed. Now, this is making the pound stronger, which is not good for this move to the downside. So, as we have already identified, daily structure is still bullish. Institutions are still longing and closing shorts. So until from a daily perspective, the market will remain above this support, it can easily continue higher. However, if we do get a break to the downside, it means that institutions started shorting and closing longs. At that point, we will see that reflected also in the reports. So if we do get the break on the retest, how we could be approaching the rejection lower, anticipating more shorting from an institutional perspective inside of this zone. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the price of the mentorship program from $497 for lifetime access all the way down to $97. And as an option, if you want, you can join Blueberry Markets, the forex broker, from the student dashboard, and you have the possibility to get a full refund credited back into your trading account if you join them from your student dashboard. Now, if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that directly from here, you join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.